Well, as we told you earlier, shares of Canada Goose are up in a big way as that company has topped expectations with its most recent results. The stock is up 26% at this moment. Joining us to talk about it more is Rick Patel, equity research analyst in digital commerce at Raymond James. Rick, thanks a lot for joining us. What do investors like so much about these the results that they're bidding the shares up by more than 25% today?
Yeah, thanks for having me. So look, results came in better than expected for the March quarter. The street was looking for revenues to be close to flat, and they ended up coming up at plus 7%. And the beat was driven by their direct-to-consumer business, which is an area that they're investing more heavily into and that they have needed to turn around. And they're showing some good progress there. And then we also saw some nice improvement across both gross margins and operating margins, both of those coming in significantly above expectations. So all in, it was a very good quarter, top to bottom.
The company sells its products, high-end winter garments all around the world. Asian markets are a very important part of the Canada Goose story. What should investors understand about tariff risk here and trade uncertainty?
Yeah, so on tariffs, they make about 75% of their units in Canada, and they make the other 25% mostly in Europe. And they sounded on the conference call pretty confident about their ability to navigate tariffs. Keep in mind, in Canada, they are exempt from some of the tariffs that are going on right now. So the ability to realize higher costs is going to be somewhat manageable by them. Keep in mind, they also have a history of taking up pricing. We do expect them to take up pricing this year, probably below the average level that they've taken in other years. But overall, the cost increase should be pretty manageable in terms of the tariff risk, at least compared to a lot of other companies in softlines.
The company did not provide forward-looking guidance. Is that typical for Canada Goose, or is that something that came as a surprise?
I would say that typically they have provided guidance in the past, across revenues, and they've given guardrails around some of the margin parameters. Today, we didn't get anything quantifiable, and they attributed that to uncertainty around macro and the trade policies that are going on right now. I would say that, it's atypical of them to not provide guidance, but at the same time, we've seen many companies throughout earnings season not provide guidance just given the macro uncertainty, and this just adds to one of several companies that have taken the same posturing.
The company's messaging seems to put a great deal of emphasis on marketing. It uses phrases like, when our brand connects. Our quarter was fueled by compelling storytelling. We elevated our brand. How important is marketing, and how significant is marketing spend at Canada Goose?
Yeah, so marketing is something that the company's been leaning more into, and it's becoming more important. So when we think about the March quarter and how that played out, results were better than expected as a function of them leaning more into product innovation and also reinforcing that with the higher marketing spend. So what they've seen is that the more they invest in marketing, the more it's helping demand creation, and it's driving a sequential improvement in their business. So as they look to their fiscal 26, which just started in April for them, the goal is to continue reinvesting in marketing. You're likely to see some deleverage in the next year, and that is in order to drive the top line, which again, they have some pretty good momentum at the moment. And
the company references a Snow Goose campaign under creative director Hayder Ackerman, which I gather is a new relationship. Was that effective in the quarter?
It was effective in the quarter. So Hyder joined the company, not too long ago, and he's been in the process of introducing newness and innovation through capsule collections. The Snow Goose campaign was one of his first, bigger product launches, and the initial reads on that were quite good. So the goal is to continue reinforcing the marketing messaging that is working around the Snow Goose campaign, and backing that up with an acceleration in innovation, particularly in areas outside of their core parka business. The goal here is to have much more year-round relevant assortment and not lean so much on parkas, and Hyder's campaign is a big part of that.
So the company has not provided guidance. What kind of profit growth sales and profit growth do you expect over the next year?
Yeah, so we haven't updated our estimates yet, so stay tuned for that. But I would say when you think about the big picture, they do have a lot of momentum around the direct-to-consumer part of the business. They talked about how quarter-to-date trends were still trending favorable. And at the same time, as I mentioned before, they do have some levers to offset some of the tariff risks. So I would expect, the market to focus on their ability to manage their margins in relation to the tariff risk and continue to build the momentum that they've seen over the past several months.
Rick, thank you so much for this insight. Rick Patel is equity research analyst in digital commerce at Raymond James, and he follows, as you just saw, very closely Canada Goose. Stock is up by more than 25% today. Coming up, we'll check